Well, we got a couple of bullish calls out this morning. Both BMO Capital Markets and Deutsche Bank out with their new calls for the S&P 500 for 2024. They both see the S&P 500 reaching record highs of 5,100 by next year. And now here with a breakdown of this recent sentiment, we have our very own Josh Schafer. Josh, you and I were going back and forth on these calls here from the street. And I want to start with what we heard from BMO Capital Markets. Brian Belski there leading this call. And what stuck out to me, and you I think as well, is the call that he has for earnings growth next year and exactly where he sees EPS. He has the S&P 500 EPS target of 250. What's the rationale behind that?
250 is the highest we've seen among these different calls so far. You know, Deutsche Bank actually has a $250 call too, which I didn't notice when we were talking earlier this morning and I was going back through the notes. They're both at 250, but as you can see on your screen, significantly higher than where a lot of the other banks are. And basically, I mean, this is a conversation that's been ongoing about, you know, that quote unquote earnings recession being over, earnings having we've seen the peak declines there and sort of rebounding, overall feeling better about the economy and the way companies have positioned themselves. And then that sort of leads us to the price target and sort of what Brian Belski is overall saying here when he says normal for longer. He thinks about a 20 PE on the S&P is fair. And so a 20 PE on the S&P brings you to about 5,100 based on his earnings call, and 20 is obviously a little bit higher than maybe the average, closer down to 16. So he's saying, you know, we think we're in this stage now where normal for longer, well, the second year of a bull market is about 11% in the S&P is the upside we'd see. That's what he's calling for. So he's sort of saying we're back to just buy the S&P 500 and things might be okay and you're going to go up 11%, which I thought was interesting. I think my biggest takeaway, though, from this note and starting to think about what we're hearing in 2024, it's kind of okay to be a bull again, right?
It certainly seems like that.
I was reading through Belski's note last year.
Right.
Belski's always bullish. We always call Belski bullish. You can go back 10 years and read Brian Belski calling it a secular bull market. Last year, he had the S&P about flat from his 2022 target. A lot of talk about recession, little bit of anxiousness about what was going to happen. He basically makes out the case here, if there is a recession, it's going to be okay because we've talked about it so much. And Deutsche Bank said the same thing too. That recession that we're talking about now is shallow. In general, strategists aren't that scared of the 2024 recession the same way they were scared of the call for a recession in 2023, and that's starting to stick out to me from these notes.
Yeah, I think that stands out as well. And when you think about, so last week was a holiday shortened week, but are we kind of back to reality this week in terms of data, company reports that we're watching? What are you looking for in this week ahead,
Yeah,
Josh?
Diane, there's certainly more things to watch this week. And as we were just sort of talking about when we think about this week and what it could mean for the end of the year, we're kind of in that, we're talking about the soft landing, right? And if we're still going to be on pace for that. So the key thing you're probably looking at this week is that Thursday data release of PCE, specifically core PCE. We know that's the Fed's preferred inflation measure. We want to see core PCE coming down, of course, in the same way that we saw CPI coming down. We're at the point now where that CPI measurement from October pretty much priced out rate hikes, any more rate hikes, and it now has people talking a lot more about when rate cuts are going to happen. Be interesting to see if rate cuts move at all this week with the PCE. Do we see that move up a little bit? We've seen a couple quick moves to March in those markets that we know are very volatile, but does that actually stick this week if you get a good core PCE number where people actually are starting to call for cuts earlier? I think is probably the number one thing I'm looking for.
Yeah, we'll certainly be paying attention to that PCE data later this week. Josh Schafer, thanks so much.